Hey guys, this is Trey Bell with the Bell team at Keller Williams. Just wanted to thank you for spending a couple minutes with us today. I wanted to go over some market stats with you today and kind of where we are through the first 4 months of the year. A lot of people say we're in a seller's market right now, so what does that mean for you? Well, basically it's supply and demand. There are more people out looking for homes right now than there are homes on the market. So the demand is high and the supply is low. And what that does is creates competition in the market, and because of that, prices do increase. Currently, we have a 3-month supply of inventory on the market. Now, this is all resale data, not new construction, but what that means is that if we were to stop stop listing homes today, and not another home is listed, it would take 3 months for the inventory to be sold out completely. A balanced market is somewhere between 5 and 6 months, so that's why we're on the seller side of that market. We've drawn out a graph here of sales prices from January through April of last year, 2016, and this year, 2017. Last year, you'll see that sales prices started out around 200 in January, and by the end of April, they were up to over 240. And in 2017, home prices started out just above 240, and they finished around 300. It was a 293 and some change. This is raw data, and it doesn't show exactly what type of properties were sold, so all that can change this information, but it's really just a snapshot of where the market is. I averaged all of those numbers, and in 2016 the average came out to $216,149. In 2017 the average came out to $240,000, the average price of a home sold. That's an 11% increase. Now that's a big number, and I think you'd have to look at a wider set of data from a longer time period to see the actual amount of value that we've had increase in home prices, but I think that's a great number to look at for people to have a home to sell. On the flip side of that coin, I want to talk to you about buying a house. Interest rates are the deal in buying right now. We've mapped out interest rates from 2000 to 2017. So in 2000, you can see the interest rates were at 8%. And over time, they've gone down with the recession. They got to 3.66% in 2012, and now they're kind of starting on that upward trend again. For a 30-year conventional loan with 10% down and good credit, you can expect to get an interest rate somewhere around 4.125% right now. So what I've done is I've shown your monthly payment from 4.125 to 4.5 to 5, 6, and 7% interest rate. You can see, now this doesn't include PMI or escrowed amounts, this is just interest rate, principal and interest only. You can see the difference that you would pay each month. Just to kind of put this in perspective and talk about the time value of money, between 4.125 and 5%, you could save over a year an average of $1,400. I thought these are really telling figures. At 7% interest over 30 years, you would have, between buying today and buying at 7%, you would have saved $146,000 in interest. Those are huge numbers to consider. I understand this is a lot of information to digest. It's kind of nerdy, but we thought this was a good way to show you where we're at. But we would love to talk to you about selling or buying your home and what these numbers mean for you. If you're considering selling, if you don't know what you could get for your home, I want to talk to you. If you would sell, if you could get X for your home, I want to talk to you to see if that's a possibility. If you're buying, we can get you plugged into one of our approved lenders that we know, like, and trust, and get you to them. You can talk about the money situation with them. There's no obligation, there's no strings attached. We'd love to help you make these decisions over the next few months. It's a great time to list your home right now. We're coming into a summer market. If you're planning on moving schools or you want to be in a school system, you need to be thinking about it today to get your home on the market.